It's a blank check company, so it's money looking for a home, and it's on like once it forms and goes public on the market, it's blank. It can do whatever it wants. It can acquire something with like the votes of the people that are in charge of the pool of money. And it usually sets at about $10 a share. And what that money is looking for a home. And the clock starts ticking once it goes public. Like if you look on Market Watch, IPO calendar, you'll see all these like blank acquisition company. Once it goes public on the stock exchange, that money's looking for a home, and it's got like there's different terms. Some are like 2 years, or and I think at the end of some of these cycles, because we've had a massive swoon of SPACs going onto the market, you might see some just grabbing up garbage companies because this money has to be spent. Otherwise, poof, it gets redistributed to everyone without being put to work. You are, like if you put $10 into a share of a SPAC, you're supposed to be guaranteed that you will at least get that $10 back. With the market dropping recently, you've seen a lot of these. For a while, all these SPACs are just going straight up. And you've had some really bad SPACs. I think some of the good ones are still way above $10. Some of the bad ones have dropped below $10, which $9, $8 or something like that. You are protected from losing your money until the SPAC goes through with the acquisition. They do what's called a reverse merger. So the pool of money merges with an existing company, like some decent ones that have come public are like Chamath's, Polyapatia. He had Virgin Galactic and Open Door and Social Finance. And so that pool of money merges with that company. He has Social Capital Hida Sophia was the name of his SPAC, and then it becomes Social Finance. Takes the name and merges the company, and it's a normal company once it does the reverse merger. But yeah, when that money drops below $10, then it creates kind of an issue, and a lot of times the people won't approve it once it's lost that. And that money is then redistributed back to the initial investors at $10, not $8. But they don't get, if it went up to $18 or whatever a share, they don't get that if it was below. So that's kind of a history of all the three different types of vehicles a company could go public. And Coinbase was the direct listing. Let's see. All right. So Coinbase is something I personally use, so I can speak to it and not be talking through a butt. And so they are a platform, an on-ramp, if you will, to cryptocurrency. They interact with three different types of clients, really. They really start as consumer-facing. People going on buying Bitcoin, Ethereum. They've expanded into more and more kind of altcoins. I don't even like calling them altcoins now because they're like mainstream protocols and stuff. And they are actually known. I think one of the things I really like about them is they even have their own term. It's called the Coinbase effect. They have such a strict vetting process. And one of the biggest things they've been all about, Brian Armstrong of Coinbase, is legitimizing crypto. And I know that there's all these different ways you can get involved in the crypto space. I actually got in through Robinhood initially when they opened up their crypto. Then I got into Cash App. But as I got more and more into it, I started talking to people and realizing, you may not really be in charge of your crypto as much as you think you are through the PayPals and the Cash Apps and the Robinhoods, and maybe not be able to transfer it out. You have to transfer it back into cash, I know, if it's in Robinhood. And you may not have access to some of these really cool things that are in the crypto space. Be it you're a lot more whim. They're very they're giving you very limited selection as to what cryptos you can get into. I mean, Robinhood has Dogecoin, and I'm not a fan of that. It can be infinitely printed, and it's just kind of a meme thing. Coinbase is trying to bring legitimacy. Brian Armstrong's worked very hard to, instead of having the ethos of most Silicon Valley, like move fast and break things like Uber did and everybody like Facebook, they want to move slowly and create legitimacy. And yes, you could actually access these markets without a middleman like Coinbase that charges kind of some high fees, or a Gemini, or a Binance, or a can't think Voyager. But it's one of the incentives to be in one of these things is maybe some of the services they provide, some of the security. If you want to you could use a decentralized platform. I'll talk about that a little bit later. It's actually like a computer program or a blockchain program that allows you to buy and trade and kind of do a lot of what Coinbase does, like a decentralized marketplace or exchange. It allows you to do a lot of what Coinbase does, but without any humans involved in this process. But Coinbase, a lot of companies are going through them. Look, Tesla's gone through them. Other companies that are wanting to put institutional money in, they feel that sense of security. If you're doing it yourself, you have to get a wallet. You have to have what's called a key, which is a series of 12 words like computer, door, brick, face. There's 12 words that compose your wallet. And if you lose that, people, like, there's stories of people just losing all their Bitcoin that bought it in like 2012 or something like that. Or it's on a flash drive somewhere they lost. And that's one of the services of Coinbase is custody. Gemini does custody, and they do cold storage, which is where you store offline, so it's not vulnerable to hacking. It's not stored on like the ledger says that these transactions happen, and you can actually access the ledger at any time with your keys, but you have storage offline so that there's always backups and things like that, and you can't lose these things. And so Coinbase offers these services and a sense of legitimacy. The Coinbase effect is a lot of these coins that are, in 2017, there was the ICO craze, which is all these companies going public, or all these coins going public, and the SEC was like, these are securities. And some of them were complete Ponzi schemes and all this mess. And I think Coinbase, through all of this, has really they vet who is on. They don't just allow any coin, like a Dogecoin or whatever, onto their platform without having kind of this list of criteria. If you want your coin to be on Coinbase, you've got to submit like a proposal, and they go through it and really do go through this whole checklist as to like what criteria it needs to meet, how legit it needs to be. And while it's frustrating sometimes because some coins I would like are not on there, it gives me a sense of like comfort that like it's not like Robinhood or something where they're just like, oh, we'll give you 4 coins, and some of the coins they have are questionable anyway. But they try to put as much as they can on as they feel that it's a really solid thing. They also have like Coinbase Wallet and Coinbase Pro. Coinbase Pro lets you do more trading. Coinbase Wallet lets you have your element of custody. You can transfer your Bitcoin and stuff out of Coinbase, so they allow you complete control of it. They also let they have their own wallet, like where you have the wallet, and you can transfer, and they have the API that goes between Coinbase and your wallet, so it's easy to transfer money. And that's what I personally do, is put most of my money in Bitcoin and crypto in the Coinbase exchange, and then I treat the wallet, instead of like all my money in the wallet like some people do and then they lose their keys, I just treat that as like more so like if you needed some crypto to transact with, as you would actually have a